For those looking to snag a property deal, short sales present a lucrative opportunity. These sales are a more secure route compared to foreclosures, benefiting both the seller and their financial institutions. This often leads to properties being listed slightly under their market value. Nonetheless, the intricacies of a short sale surpass that of a standard property transaction, bringing with them a higher degree of risk. Embarking on a short sale requires a clear understanding of what it entails. This video equips you with essential insights, helping you to skillfully navigate the complexities of a short sale and assess if it aligns with your specific needs. Short sale. Definition and explanation. A short sale takes place when a homeowner grapples with significant financial woes and opts to sell their residence for an amount that falls short of their outstanding mortgage debt. In such a scenario, the entity that provided the initial mortgage receives the entirety of the sale's proceeds. Subsequently, they may choose to either absolve the remaining debt or pursue a deficiency judgment, obligating the initial borrower to settle any residual balance. If you're finding this video insightful and wish to explore more content like this, don't forget to subscribe to our channel. Stay informed and ahead in the realm of real estate with our upcoming videos. Why can short sales be beneficial? While this setup might appear disadvantageous for the lender, particularly when the remaining debt is waived, it's frequently a more favorable option than foreclosure. A short sale represents a mutual concession by both the homeowner and the lender to mitigate a challenging financial predicament, even though it involves accepting a loss. This often opens up an opportunity for buyers to benefit from the deal. However, prospective buyers should be cautious, as purchasing a property through a short sale doesn't guarantee a sound investment. When does a home go into short sale? A property is put up for short sale when the owner acknowledges their inability to continue affording the mortgage repayments. Rather than letting the bank seize the property through foreclosure, the homeowner proactively initiates the short sale process by submitting a request to their mortgage lender. The lender evaluates two crucial aspects when considering a short sale request. 1. The property's current market value must be lower than the amount owed by the homeowner. The lender will examine recent sales of similar properties to confirm this condition. 2. The homeowner must demonstrate financial distress. They need to provide evidence that their current financial status, including income and assets, is insufficient to cover the remaining mortgage debt. Short sale versus foreclosure. Short sales and foreclosures both arise when homeowners struggle with their mortgage payments, or when they discover that their mortgage exceeds the value of their home, a situation known as being underwater. In either scenario, the homeowner ends up relinquishing their property, but the specifics and consequences of each process differ. A key distinction lies in the level of control the seller has. In a short sale, the homeowner proactively decides to seek approval from their lender to sell the property for an amount less than what is owed. This approach is a voluntary decision by the seller, unlike in the case of foreclosures. When a lender greenlights a short sale, the seller leads the sale process, but the lender plays a pivotal role in negotiations and has the final say in accepting or declining offers. This is because the lender aims to recover as much of the outstanding loan as possible. Conversely, foreclosure is a legal procedure initiated by the lender to take over the property when the homeowner fails to keep up with mortgage payments. Both situations adversely affect the homeowner's credit score, but foreclosure typically inflicts a more severe blow on their FICO-registered score and extends the period before they can secure another mortgage. Foreclosure can also lead to substantial costs for both the homeowner and lender and may push the homeowner toward bankruptcy in certain instances. What does a short sale mean for the buyer? At the other end of a short sale transaction stands the home buyer. Frequently, purchasing a home through a short sale can present an advantageous deal in the real estate market. These homes typically maintain a better state of upkeep compared to other distressed properties. However, acquiring a home via a short sale demands patience and carries certain risks. Thus, it's vital for buyers to thoroughly comprehend both the potential advantages and pitfalls before proceeding with an offer. We will delve deeper into the advantages and disadvantages of short sales shortly. How to buy a short sale home. The process for buyers in 6 steps. While the fundamental steps of a short sale resemble those of a conventional real estate deal, the involvement of a lender adds layers of complexity. In a typical property purchase, the transaction is straightforward. The seller exchanges their equity for the buyer's payment. In contrast, a short sale transaction is heavily influenced by the lender, leading to a more drawn-out and intricate process. The following 6 steps highlight the main differences between a short sale and a traditional property purchase. Step 1. Secure financing approval. The first step in any property acquisition is securing financial approval. This is particularly crucial in a short sale, where the lender's confidence in the buyer's financial capability is a key factor in proceeding with the sale. Step 2. Engage a real estate agent and search for properties. Finding the right property, especially a short sale, can be challenging. Focus your search on pre-foreclosure listings online or through public records at local county courts. A skilled real estate agent can guide you through the nuances of short sales, assisting in both locating and understanding the process. Step 3. Conduct thorough research. Gather comprehensive information about the property before making an offer. Begin by assessing the home's value through comparable area sales. Real estate agents, with their access to the Multiple Listing Service, MLS, are valuable resources for this. Since short sales involve properties valued less than their mortgage, determine the exact amount owed to the lender. Investigate any additional liens on the property by consulting the seller, their agent, lender, or a title company. Step 4. Submit your offer. Your offer should reflect local property values and anticipate the lender's perspective, as they aim to recover a significant portion of the mortgage. Your bid should align with market value to increase its likelihood of acceptance. Stay vigilant for fraudulent practices, such as under-the-table payments requested by the seller. Step 5. Inspect the home. Short sale properties are sold, as is. While you can't negotiate based on property conditions, it's still crucial to understand what you're buying. Conduct a thorough home inspection and, if necessary, estimate repair costs to evaluate the home's long-term financial feasibility. Step 6. Finalize the sale. After lender approval, ensure all lien holders agree to release their claims on the property. The sale's closure requires specific documentation from the seller, including a hardship letter detailing their financial struggles, proof of income and assets, a list of all property liens, and a comparative market analysis. With all documentation reviewed and approved, you can complete the purchase, acquire the keys, and take possession of your new home. Benefits of a short sale in real estate. Short sales offer substantial advantages to all parties involved, creating attractive investment prospects for buyers while reducing the financial strain on lenders and sellers compared to foreclosure scenarios. Let's examine the specific benefits for both buyers and sellers. Benefits for buyers in short sales. Key advantages for buyers in short sales include favorable pricing. Although these properties are priced at market value, lenders are eager to sell to minimize their losses. This often allows buyers to secure a property at a more favorable price than in a regular sale. Reduced competition. The complexity involved in short sales, due to lender involvement, deters many buyers unfamiliar with the process. This results in less competition, increasing the chances of offer acceptance. Advantages for sellers in short sales. Sellers also benefit in several ways, including avoiding foreclosure. Completing a short sale prevents the property from going into foreclosure, which is significantly more damaging to the seller's credit score. Debt reduction. A large portion of the seller's debt is cleared by the sale. Fee savings. Unlike regular sales where the seller pays agent commissions, these fees are covered by the lender in a short sale. Possibility of debt forgiveness. There's a chance the lender will accept the sale proceeds as full settlement, writing off any remaining debt. Re-entering the housing market. Sellers may immediately re-enter the housing market and qualify for an FHA loan, provided they haven't had late mortgage or installment payments in the year before the short sale and in the year before applying for the new mortgage. Drawbacks of a short sale. While short sales offer various benefits, they also entail certain disadvantages that can complicate and prolong the transaction, potentially affecting the financial interests of buyers, sellers, and lenders. Below are some challenges encountered by both buyers and sellers in short sales. Challenges for buyers in short sales. Buyers interested in short sale properties should be aware of several potential drawbacks, including extended duration. The involvement of the lender often means a short sale takes more time to complete than a standard sale. Negotiations with the primary lender and any junior lien holders can be lengthy, and the process can be further delayed by sellers reconsidering their decision or lacking necessary documentation. Higher risks. Short sale properties are sold, as is, often without comprehensive disclosures like a seller's disclosure. This makes the home's condition and the overall value of the deal uncertain. Additionally, the finalization of the deal is not guaranteed, posing a risk of wasted time and resources for the buyer. Increased due diligence. Buyers in short sales must conduct thorough research to determine the true value of the property, uncover all existing liens, and assess any property condition issues to make an informed decision. Property maintenance. Properties in short sales may require more maintenance and repair due to the seller's financial constraints, potentially increasing the buyer's investment in the property. Challenges for sellers in short sales. Despite the advantages, sellers face several downsides in short sales, including limited negotiation power. While sellers are involved in the sale process, the lender ultimately has the authority to negotiate the sale price. No financial gains. Sellers, being indebted to the lender, do not receive any proceeds from the property's sale. Credit score impact. A short sale can negatively affect the seller's credit score, with the impact varying based on their initial credit standing. However, the effect is generally less severe than a foreclosure. Mortgage acquisition delay. Sellers may face a waiting period before qualifying for a new mortgage, especially outside of FHA loans, ranging from 2 to 7 years. Risk of deficiency judgment. In some cases, lenders may pursue legal action to recover the remaining debt from the seller after the short sale, which can impact their credit score similarly to a foreclosure. This practice, however, is not legal in all states. 5 buyer tips for navigating short sales. For buyers navigating a short sale, consider these strategies to enhance your prospects throughout the process. 1. Assess repair costs. Even though short sale properties are sold, as is, it's wise to conduct a thorough inspection and obtain repair cost estimates. This knowledge not only helps you evaluate the property's value, but it can also strengthen your position in negotiations with the lender. Demonstrating the property's actual condition might persuade the lender to lower the selling price. 2. Present a reasonable offer. While lenders are keen to sell, they also aim to maximize their return from the sale. Offering an unrealistically low price or demanding too many contingencies may lead to the rejection of your offer. 3. Maximize your cash contribution. Lenders, having already incurred losses, prefer secure transactions. Cash payments are particularly attractive to them. If paying entirely in cash isn't feasible, a substantial down payment can make your offer more compelling. Remember, if you need financing, secure pre-approval before making an offer. 4. Propose to cover seller's closing costs. Though lenders generally cover the seller's commission and fees, offering to pay closing costs can enhance the attractiveness of your offer. This strategy is especially useful if there are other interested buyers, as it helps the lender recover more funds. 5. Seek assistance from a real estate expert. Navigating a short sale's complexities necessitates professional guidance. Real estate agents, especially those experienced in short sales, are invaluable. They can thoroughly research the property, provide insights on its value, negotiate more effectively, and safeguard your interests in a transaction largely controlled by the lender. Is buying a short sale right for you? Determining whether a short sale aligns with your requirements isn't always straightforward. When pondering this option, it's essential to weigh your personal needs against the particularities of the property in question. Keep these 3 crucial aspects in mind. Expect extended timelines. Be ready for a lengthier process and have the patience to see it through. Accept the property as is. Understand that you will be purchasing the home in its current condition without any modifications or repairs from the seller. Prepare for a higher down payment. Anticipate needing a substantial down payment to secure the deal. It's critical to thoroughly assess the property's condition and the costs of necessary repairs. The initial savings from a lower purchase price could be offset by significant expenditures needed to make the home habitable. As we wrap up our exploration of short sales in real estate, it's clear that this area, while complex, offers unique opportunities for buyers and sellers alike. The intricacies of short sales underscore the importance of understanding the broader real estate market, especially for those just starting or operating with limited funds. If you're intrigued by the prospect of real estate investment but are unsure where to begin, especially if you're working with a tight budget, our next video is tailored just for you. We delve into the world of real estate investing for beginners with no money, providing you with practical strategies and insights to kickstart your journey in the real estate market without substantial financial backing. Just click on the video appearing on your screen to continue learning about making smart, informed real estate investments, even when starting from scratch.